the trade war between the United States and China. This ongoing conflict has significant implications for economies worldwide. The trade tensions between the U.S. and China didn't start overnight. They have roots going back decades. The U.S. has long accused China of unfair trade practices, including intellectual property theft, forced technology transfers, and state subsidies to Chinese companies that distort global markets. Over the years, these issues have contributed to a significant trade imbalance, with the U.S. importing far more from China than it exports. The trade war officially began in 2018 under President Donald Trump. The U.S. imposed tariffs on billions of dollars worth of Chinese goods, aiming to pressure China into changing its trade practices. In response, China retaliated with its own tariffs on American products. This tit-for-tat escalation led to a turbulent period for global trade. Tariffs, while intended to protect domestic industries, come with significant downsides. They can lead to higher prices for consumers and create disruptions in global supply chains. For instance, American farmers, particularly those growing soybeans, face severe impacts as China imposed retaliatory tariffs on agricultural products. U.S. manufacturers also felt the strain, dealing with increased costs for imported components. Throughout 2018 and 2019, both nations engaged in intense negotiations. The talks were complex and often fraught with setbacks. However, in January 2020, a Phase 1 trade deal was signed. This agreement saw China committing to purchase an additional $200 billion worth of U.S. goods and services over 2 years, including agricultural products, manufactured goods, and energy. In return, the U.S. agreed to reduce some of the tariffs imposed earlier. Just as the world began to assess the impacts of the Phase 1 deal, the COVID-19 pandemic struck, further complicating the trade landscape. The global economic downturn and supply chain disruptions caused by the pandemic exacerbated existing tensions. The health crisis underscored the vulnerabilities of global supply chains, prompting both countries to reconsider their economic dependencies. Many experts suggest that the trade war has accelerated a decoupling of the U.S. and Chinese economies. Both countries are increasingly looking to reduce their reliance on each other, with the U.S. seeking to bring manufacturing back home or diversify to other countries, while China aims to become more self-reliant in key technologies and industries. Under the Biden administration, the approach to China remains firm. While there have been efforts to engage diplomatically, many of the tariffs and restrictions from the Trump era remain in place. The Biden administration has emphasized working with allies to address China's trade practices and has continued to scrutinize Chinese investments in critical sectors. The global repercussions of the U.S. China trade war are far-reaching. Businesses worldwide are rethinking their supply chains, and countries are reassessing their trade policies. Consumers, too, are feeling the effects, from higher prices on goods to reduced product availability. So, what does the future hold for U.S.-China trade relations? It's a complex and evolving story that will undoubtedly shape global economics for years to come. Stay tuned to our channel for ongoing updates and in-depth analysis. Don't forget to like, comment, and subscribe for more insights into global economic trends. Thanks for watching.